The Federal Reserve, also known as the Fed, is the central banking system of the United States. It was established in 1913 with the passing of the Federal Reserve Act. The Fed is responsible for implementing monetary policy, which is the process of managing the money supply and interest rates in an economy. The Fed has several key responsibilities, which include managing the money supply. The Fed controls the amount of money in circulation by adjusting the reserve requirements for banks and by buying and selling government securities on the open market. This is known as open market operations, and it is one of the main tools the Fed uses to manage the money supply and interest rates. Regulating banks. The Fed is responsible for supervising and regulating the nation's banks and financial institutions to ensure they are operating safely and soundly. This includes setting capital and liquidity requirements for banks, conducting regular inspections and audits, and providing support to banks during times of financial stress. Providing financial services. The Fed provides a wide range of financial services to the U.S. government and other entities. This includes issuing currency, serving as a lender of last resort to banks, and processing electronic payments. Stabilizing the economy. The Fed's most important role is to stabilize the economy by controlling inflation and promoting full employment. To achieve this, the Fed sets interest rates and uses other monetary policy tools to influence economic activity. For example, if the Fed wants to stimulate economic growth, it may lower interest rates to encourage borrowing and spending. If the Fed wants to slow down inflation, it may raise interest rates to reduce borrowing and spending. The Federal Reserve System is made up of 12 regional Federal Reserve banks and the Board of Governors, which is based in Washington, D.C. The Board of Governors is appointed by the President and confirmed by the Senate. It is led by a chairman who is appointed for a 4-year term. The Federal Open Market Committee, FOMC, is the main policymaking body of the Federal Reserve. It is made up of the 7 members of the Board of Governors and 5 of the 12 Reserve Bank presidents. The Federal Reserve System is designed to be independent of political influence. This independence is to ensure monetary policy decisions are made in the best interest of the economy and not for political reasons.